Good morning. Good morning. Good morning. Up and running. Happy hump day. Happy Wednesday, January the 21st, about 6:30 a.m. my time. How's everybody doing? Let me know you're here. Say hello in the chat if you would. And let me know if you guys got anything going. Xander, good morning. Good morning. I am in a long on Aussie Swiss that I got in yesterday. It would have been a little while after the live stream ended, maybe a couple hours or so. We'll take a look at that here in a moment. Aussie Swiss is one of let me get my charts up here. It is one of the assets on the long list or on the bullish list. So let me get that up here real quick. There we go. So Aussie Swiss giving us a +9. Common theme here is selling the Swiss because we got a few Swiss pairs on there. Swiss, of course, being one of the weaker currencies, it's really not a whole lot of surprise. New Zealand, Australia, Canada, those three are on there with the Swiss franc because they're some of the stronger currencies at the moment when we're talking fundamental analysis. Fundamental report releases. So just another quick look at that. Let's see here. Let me refresh this screen. Something's not looking right. Today we got the World Economic Forum happening over in Davos, Switzerland. So President Trump is set to speak here in about an hour, assuming everything is still on schedule. Shortly before I went to bed, I saw that they were on their way. They left Joint Andrews Base and then got up in the air, got over the Atlantic Ocean, and had to turn around and actually land because of a minor, what they said was a minor electrical problem in the plane. So that's not a very comforting thing to hear. Where in the hell is my? Oh, here we go. So yeah, that wasn't a very comforting thing to hear, that they had to turn around and go land. And I think they had to switch out planes. Of course, that's a big, giant thing, considering how big of an entourage travels with them and that kind of thing. So it's not just a 5-second process. It involves a whole lot of moving around. So anyway, I haven't seen anything. Let me see. Perhaps he put something on his Truth Social. I don't know. Just thought I would take a quick look here. Yeah, it doesn't look like he posted anything about that. So I assume everything is still good to go. But yeah, he's set to speak here at the bottom of the next hour. If we take a look over here, 7:30 my time. Okay, so that's Central Standard Time. But that'll be the afternoon over there in Davos. I don't know, probably 3 or so p.m., 2 p.m., 3 p.m., somewhere in that area. He'll be set to speak at the World Economic Forum. So it's going to be an interesting readout to see what he talks about. It's kind of a hot topic right now with Trump tariffs on Greenland, the whole 9 yards, guys. It's a never-ending reality TV show with this administration. It's quite the entertainment, if I may say so myself. When it comes to politics, I never gave an ounce of care about it back in the past. But when you get into trading or especially investing, meaning long-term stuff, long-term swing, position trading, you got to know politics, man. It's not like the popular thing, probably among a bunch of your circles of friends or family, things of that nature. But you have got to understand the politics of the world, the geopolitics of the world, so that you understand where the money flow is going and where the money may potentially have a hang up and have to go find other places. So, it's kind of a double-edged sword. It can get annoying at times, but when you understand it, man, it helps trading and investing quite a bit. In the scheme of money flow. So anyway, that's coming up here at the bottom of the next hour. As far as other events going on today, looks like the British pound CPI number came out positive. So that's a good thing for the British pound, because again, they've got as of yesterday, or as of before this report, they had the second economic surprise meter. So it looks like they are still in second. They've just gotten a little bit of an increase. Remember, this thing for the British pound, okay, for the pound sterling, this thing was at 0% just about a week and a half ago, 2 weeks ago. Then we had a positive retail sales number come out for the pound, and now we've got that now we've got that positive CPI number coming out. So let's take a look at just the pound itself. And we should see a couple blue boxes. Yeah, there we go. So GDP, that was the GDP number a week ago. And then here's your CPI, your inflation number coming out 0.1% higher, which is a bullish number for the currency. And then, of course, bearish for the German DAX, right? Or German DAX, I'm sorry. The FTSE, the FTSE 100, which is their top stock index. So double-edged sword, as always, when we're talking these inflation readings, CPI, PPI, okay. Usually what's good for the currency is bearish for the stocks. What's bearish for the currency is bullish for the stocks. So that's kind of the way that works. But they have now got two blue boxes. So congrats to the pound. You've come out of the cellar and you've got a pulse, okay. It's only 28% impact, meaning there's only, it's just a small sample size, but 28% of the reports have exceeded expectations, which means the rest have missed. So it's still not the greatest currency, but it's just not as bad as it was, again, a week ago before this GDP release came out. So there's your UK, there's your pound reading, and your UK stock market. Okay, so and then let's see here. Going back to the readings over here. So yeah, again, Swiss is at 0. We haven't looked at the Swiss in a minute. Let's go take a look at that. Sick. Okay, so no blue boxes. You've got one report on their inflation number where they got that number correct, neutral. So it kind of cancels itself out. It's an expected number. So a lot of times, most of the times, you don't get a big giant move, a big giant volatile move one way or the other whenever those readings come out right on target, right on forecast. But it did have its final nail in the coffin yesterday. As far as the PPI number, it came out a 0.2% lower. I don't know why this doesn't say 2%. It should show 2% there, but I don't know. For some reason, it's not showing. But nevertheless, actual number came out 1.8% in the negative, which is a 0.2% low or miss. Okay, so zeros. We got zeros. So Swiss franc not doing the greatest when it comes to high impact releases. Means the economists have failed on every single one of them. It's another way to look at it, except for the CPI. They did nail one report. So let's take a look over here. Okay, so just like what we mentioned yesterday, New Zealand dollar, Canada dollar, those $2 are looking pretty good. They have been having some strong readings of late to add to their economic outperformance. Okay, New Zealand, Canada. So we'll take a look over here. New Zealand, this was last week for their PMI number, which did come out. Remember, that came out a whole 5 points higher almost, 4.7, close enough. So that's a really, really strong number. So New Zealand dollar is looking good. Just the one miss on the PPI number here back in. It's been and it's overdue for a report. Okay, November 18th. That's when their PPI came out. It's a quarter-over-quarter number, so we should start seeing something come in soon to where, who knows, possibly that could even move up to a bullish number. It'd be interesting to see 100% on a New Zealand dollar. But anyway, Canada dollar, the other strong one, 83%. They had a miss on their unemployment rate. Their unemployment rate's not looking that great over in Canada. 0.2% of a miss back earlier in the year, about 2 weeks ago, for the unemployment rate. 6.8%. That's pretty high. That's pretty not nice. That's not very good. Two reports rather that the economists did get correct. That was their GDP number and their employment change number. But other than that, their PMI data, the retail sales, and their inflation gauges have all been pretty hot. So Canada dollar is up there in the number one spot for the strongest outperforming currency, with New Zealand right behind it. And then Japan in third at 67%. But again, guys, we do have intervention possibilities. Okay. We do have the possibility of that coming up. Could be today, could be later this week, could be next week. We never know. Okay. We know how secretive, deceptive, however you want to call it, that the Bank of Japan can be, especially when it comes to all their calendar events, guys. Just about every time you get a report for the Japanese yen coming out, they remember, they always put tentative. They never put a time. They don't ever give us a time on all their high impact event releases. So if they're going to be secretive about something simple like that, who the hell knows when the ugly I word could come into fruition? Intervention. My screen isn't showing again. God dang it. All right. Yeah. No, I didn't show anything too major. I was just going over the economic calendar, but we'll get this back up. Got my kid getting my caffeine rolling this morning so I can start turning some cartwheels. So anyway, back to top setups. Yeah. Aussie's pretty strong. It's no surprise to see New Zealand Swiss up there. Aussie Swiss, CAD Swiss. Now again, I'm in Aussie Swiss. Okay, that's the one I'm in. So let's go take a look at that. Again, I got into this thing yesterday, and I've already moved my stop loss to break even. So no matter what happens on this thing, I can't lose money. That's always goal number one. Okay. So just kind of taking a step back, Aussie Swiss, kind of looking at this most recent swing low to swing high that we kind of looked at yesterday. Again, from the daytime time frame, we don't have any inefficiencies in the market on this leg until we get clear up here to the top. Meaning all these wicks and candles are overlapping the wicks and candles to the left and to the right. So this is our first gap right here on a daily. That's my indecision candle. That's where I wrap my rectangle around, and then I drop down to the 4 hour. 4 hour, same thing. I'm looking for the first inefficient demand zone candle in this most recent swing up, swing low, swing high movement. And it's going to be right here. Again, we talked about the fact that the gap was not very strong at all, right? Little tiny box, that little thing right there. That's the gap on a 4 hour. It was just on the 1 hour. So 1 hour, it was a little better, but not too much better when you drop down to the 1 hour time frame. But anyway, the idea of this trade was wait for a bounce into the demand zone there. Okay. It's into the daily demand. It's bouncing into the 4 hour demand. And then we wait for a lift off to the top. The white dashed line you see there as a reminder, that's our 1 hour demand zone with our gap. So I ended up getting into this trade. Where did it? Well, I have to look over here on my actual 0.5324 looks like. Yeah, 0.5324 is where I bought into this trade. So we waited, and it's kind of funny. So I got into this trade. Let's see. Let's just draw a line up. 0.5324 coordinates. 0.5324. We'll just color this. We'll just color this yellow. Okay, so that was my entry right here. Basically waited for it to kind of U-shape around, curve around. And let's see here. Yeah, that's right. I think that's right. No, that's not right. Let's see. Oh yeah, it was over here. I'm sorry. So the same spot, but I waited. That's right. Okay. So I forgot where I got in for a second. So that's right, guys. I was looking at this 15-minute demand zone right here after price came out. So that's where I ended up getting into the trade. Okay. So I waited for this thing to kind of curl around, make a break of structure of the upside. Remember, that's always goal number one, especially when my gap wasn't the greatest. Like I mentioned yesterday, this was not going to be a limit order, meaning just wait for a touch of the zone. And a lot of it was because of the gaps being so narrow, so small. It was a little weak, in other words. So I had to see it at least try to show that it's breaking the structure of the upside. So that's what happened here. We got this push up here and close. That's a very strong candle. And that candle formed a demand zone just underneath it with a gap. Okay. So just waited for a simple retouch of this zone, which we got. And remember, I'm keeping my risk in the context of the 4-hour zone. So as you can see, it went through the 15, but I was more so reliant on the 4-hour, and it came down for a little bit longer before finally catching a bid to the upside in the Asia session. Okay. So, so in other words, it's going in my favor now. And if you guys remember, when we talked about this, I did mention that my take profit's going to be up here. My profit target, rather. Okay. There's a difference between a profit target and a take profit. What the hell is that? Okay. Take profit means you're going to get out of the trade. Profit target means you want price to get up there and touch that area and then reevaluate where you want to trail your stop. Okay. So that is a profit target. So but I have to be aware of any potential landmines in the area, right? On route to it. So I observe this 4-hour supply zone. Okay. So once we started getting close to that 4-hour supply zone, that's where I moved my stop loss. So I moved it from under this 4-hour demand zone to just ahead of break even. Okay. A cup of coffee, remember? Enough to cover swaps, enough to cover commissions, right? So I did that. Another cool thing I wanted to look at was the carry trade, just to make sure if I'm going to get positive swaps, negative swaps. This is ideally something that you want to do before any trade. Here's my Aussie Swiss right there. Okay, the base currency, meaning the Aussie dollar, has a 3.6% interest rate. The Swiss franc has a 0%. So my interest rate difference, in other words, am I going to get paid or am I going to pay swaps? Okay, it pays me 3.6% of my leverage, of my amount bought, right? So in other words, as I hold this trade from intraday session to the next, I get paid that 3.6% positive swap rate on my position, right? So because that's the case, because I know it's putting some money into my pocket. Okay, remember I got in this trade yesterday, so it would have, whenever the session switched over, that's where this rate takes effect. Then now I know that I can just, as far as moving my stop loss to break even, I don't have to worry about moving it, higher up to cover a negative swap, if that makes sense. So in other words, excuse me, stop loss again starts down here. And let's just go down to a 15 just to make this easier to see. Okay, so stop loss starts down here. So in other words, I can just put it right at the break even, or just enough to cover the spread, right? If it would have been a negative swap, I would probably want to be pushing my stop loss a little higher to lock in a little bit more gains to cover the negative swap. In other words, if I was short Aussie Swiss, that would mean that I'd be paying the swap. But since I'm not, since I'm the one getting paid, that's where I'm okay with just barely putting my stop loss, my trailing stop loss, just barely ahead of break even. Okay. So again, just enough to cover a cup of coffee. That's kind of my running joke, even though I don't drink coffee. I want it to pay me something, even if it is a break even trade. So hopefully that makes sense. It's a little more advanced stuff, but it's just nice to know from trade to trade if we're the ones that have to pay the swap or if we're getting paid the swap, right? So there's your carry trade little talk of the day. I don't drink coffee. No, you know what? I get what do you call it? Like the Mio Energy. I don't know if they have it, Xander, where you're at, but it's just like a little tub, like you squirt it into a cup or a water bottle and put water in there, mix it up, and it just kind of makes your own instant energy drink. So it's got like your B vitamins and things of that nature. I'll drink that sometimes, once in a while, but rarely. I'll drink a sugar-free energy drink. But I don't really like energy drinks like I did 10, 15 years ago because it'll make me. It might wind me up for a while, but then I'll crash. I don't know what it is. My body it doesn't like sugar, and it doesn't like a super strong amount of vitamins like that. Because if I get it, yeah, I'll be turning cartwheels for a minute, but then I'll crash and burn and want to take a nap. But usually ideally I'll take a caffeine tablet when I wake up, maybe another one midday, like during or after lunch. So that's kind of how I get my energy boost, if you will. Coffee, though, I will say I do like to drink. I don't mind drinking a coffee, as silly as this sounds, later in the evening, in the day, like late afternoon, early evening, because again, it'll wake me up, but then I'll crash and burn, man. So I'm okay with drinking it in the evenings because it doesn't take long before the energy wears off and I'm ready for bed. If I drink it in the morning, I'll be taking a nap by 11 o'clock. Yeah, I'm a weirdo. Coffee and cigarettes. Yeah, I'll get a vape. Do a vape now and then. Yeah, can't do the cigs. I just never had any interest. My daddy used to smoke cigarettes all day, every day, and I'd get on to him so much when he'd get my car, try to light a cigarette. I'm like, get that thing out. Not in my car. Not in my house. But anyway, I digress. We all have our vices, right? So anyway, that's Aussie Swiss. Again, just as soon as we got up in this area, that's where I wanted to make sure and move my trailing stop. So nothing to do now except just let it do its thing. Obviously, the next goal is to continue to break through the supply zone up here. 4 hour, and I just want to take one quick look here. 1 hour, yeah. See, I mean, the 1 hour supply zone, the 4 hour and 1 hour, which is up here. Okay, it's going to have the former support resistance line inside of it as well. It's that blue dash line. So yeah, just a couple landmines, and just wanted to go ahead and take away the risk. Again, goal number one for me, for all of us, should be get rid of the risk as soon as you can. Because there's no sense in having a decent sized move like this and then having price completely go against you and stop you out for an actual loss. Might as well just get rid of the risk. Because at this point, it's stress free. I ain't worried about losing even $1. Okay. And this is where the runners will come. Okay. I have a lot of trades that will really not so much close for break even like this, but a lot of 1-to-1 closes, a lot of boring ones. Okay. A lot of 1-to-1s, a pretty good handful of break evens. Obviously a loss, a 1 unit loss, right? And then every so often I'll catch that runner, that home run, if you will, that'll just go and go and go. That's really where the money's made. It's not made in these 1-to-1s. It's not made in these break evens. That's just enough to keep you from, obviously losing money. But the money comes from the runners that takes away all the small losses you had of late and then puts money in your pocket. So that's always the goal. I will cut losses quickly. I will let runners run. That's really the mantra, right? So let's take a look, though, at New Zealand Swiss. Since it's number 1 on the list, my Aussie Swiss is number 2. So New Zealand Swiss, New Zealand Yen. Yeah, let's take a look at these New Zealand pairs. New Zealand Swiss. Okay, New Zealand Swiss, just going back to my starting point. Got a little bit of a trend line type action going on through here, it looks like. Okay. So higher highs, higher lows. My most recent 4-hour demand is going to be right here, but I don't really have a whole lot of trading activity. And I'm just going to get that out of my way. Let's take a look at the daily real quick. So yeah, daily, guys, we're looking at this daily demand down here. So we're talking about this. Let me see here. Yeah. This green candle, this indecision candle. And you see I've got an alert just ahead of it. So that's where my 4-hour zone is going to be. Right here. Okay. Going to be right there. So, oh, that's not a 4-hour. Never mind. That's going to be probably a 1-hour. Let's go double check. I got so many zones. A lot of times I'll forget which time frames everything is. Yeah, here we go, guys. So 1-hour demand, which is kind of half in and half out of the daily zone. But what I really like about the 1-hour picture is the candle right after. Right? Talking about this VSA candle, volume spread analysis. Giant expanded range candle with a big giant wick, or I'm sorry, a big giant gap on it. Okay? Fair value gap from this wick here to the bottom of this wick here. That's as strong as it gets. And the volume proves it. So effort matches result. Okay, Wyckoff theory. Thado, good morning. Do you think the demand zone on New Zealand yen weekly will hold? Let's take a look at it. Because fundamentals are too strong for New Zealand. If it pulls back on that, I'm thinking about going long again. If fundamentals don't change. Yeah, let's take a look. New Zealand yen. So just taking a look at the actual fundamentals and sentiment. Yep, like you said, it's up there at a +8. So about as strong as it gets. You've only got one item against you, and that's your 10-year average on the seasonality score. But that's just one item. Everything else has been pretty decent. Okay? Either neutral, you got a lot of blue boxes. So New Zealand yen on a weekly. Let's take a look. Refresh. Higher time frame. As you can see, I got a little bit of a pitchfork in there, it looks like, which we've recently bounced at the bottom down here. Well, I say recently, but that's back that's back a year ago, 7 months ago, 8 months ago, 9 months ago, something like that. But nevertheless, you said weekly demand zone. Let me turn my drawings off for just a second. Yeah, you might let me know what price you're talking about. You said weekly demand zone, right? If it pulls back on that. Demand zone weekly. Weekly demand zone. Yeah, let me know the price you're talking about, Thado. I'm not seeing what you're seeing. Because none of this counts as a demand to me because this candle overlaps this candle. Let's see here. I mean, I guess you could put, you got one way down here, but that's way a long ways away. Let me do this. Okay. So you do have, yeah, and I was looking at this one. The gap was real narrow. So there is a gap on this day, this weekly candle here. That's quite a ways away though, right? I'll just delete that. If I go to a daily though, yeah, the daily demand. So this is the one I complained about yesterday, Thado. We had a daily demand. Now, first of all, we had a daily demand back here, but as you can see, it wicked in and bounced. So the next step is, where's the new one? Well, there was one here that I was looking at from, this one was created on Friday the 9th. And then when we came into price action Sunday, if I go down to a 4-hour, you can see it just barely missed my 4-hour demand that was inside of the daily by 2 pips. Yeah, this is the one I pissed and moaned about yesterday. As you can see right here, kind of hard to see unless I zoom in. Just barely missed. And then what happened? The damn thing took off. It broke a structure. And in its wake, it did create a new 4-hour demand zone. It's just a little high on the curve. I mean, if I'm looking at the swing low, which was obviously where it missed my entry by 2 pips, there's actually a zone all the way at the bottom of it. But I just wished I had a red candle in there instead of a green candle. Because really, there's not a very favorable looking pullback on this thing. I mean, there is a demand zone right here And there's obviously one at the origin of the strong move, which did have some pretty, decently sized VSA candles on that first 2 candles. This is after the Sunday open gap down that we had. So that's a pro gap. Okay. Pro gap down. And then obviously we just took off. So I mean, if I'm looking to try to enter this trade, again, you see where I have my alert set. So I've got the alert on this daily or on this 4 hour. I do have another one up here, as you can see, because it kind of coincided with this most recent swing high or a former resistance point that knocked price back down. I just didn't see a whole lot of confluence when I dropped down the smaller time frame. So that's your 4 hour indecision candle. The volume, though, was not the greatest on the leg out. So that's why I'm really ignoring this. You can see from all the way to the bottom. Now, after that leg out candle, we had a few candles of high volume, high trading activity. Problem was it wasn't at the consolidation where the demand zone was created. Let me see what you got here. Supply zone. Oh, supply zone. Okay. Oh, supply zone on a weekly supply zone. Yeah, let's take a look. Yeah, so that's the one I just changed. So I had this colored up red, and shortly before the stream, I turned it black because we've actually went through, right? So that supply zone is no longer. Are you referring to this one? Is that correct? Because the only live zone we have now, as far as weekly, is going to be clear up here, right? So there's going to be your new weekly supply zone for price to chase, for price to magnetize towards. Because this one, in other words, this candle here, that's no longer any good. I'll just delete. Well, the bigger box is the weekly, and then you see there's another box inside, so that's the daily. Yeah, this it's no good, my friend. Going back over here. Okay, take a look again. So there's your daily supply. And then the weekly, which was down here, but they've been chewed through. You see where price is, right? So yeah, no longer any good on that. Was that the one you were referring to? I'm assuming. Yeah. Okay. Yeah. So and it obviously, yeah, we got a ways to go as far as the next higher time frame supply zone. Now price is at the top of this little bit of resistance. So let's go take a look over here real quick. Okay, I'm not worried at all. Well, first of all, it looks like we've already pierced it. So yeah, there you go. So we've actually pierced it. So we got a ways to go to the top before I'm worried about anything. Let's go back. Let's go take a look on a daily time frame at this momentum leg down. So again, this is our weekly supply up here. And we might as well put in a daily. So there's going to be your daily supply right there. I'll color it yellow. I always do my weekly or monthly zones orange, and then my daily are always yellow, and then 4 hour or below is obviously green for demand, red for supply, right? I just want to know where the higher time frame zones are. So if I'm looking at the next potential spot for price to chase, I always want to look to the origin of a strong move. In this case, the origin of a strong move down, and it's going to be clear up here. Now, yes, there are going to be some other zones, some other, daily supply zones in here. But the first inefficiency in the price structures is clear up here, right? Because that's where your gap is closest to the origin of the strong move. So again, if I'm a bank, if I'm chasing inefficiency, meaning there's liquidity on the other side of that, that's where I'd be wanting to chase. So that's kind of the setup at the moment. I'm just going to get the daily pulled all the way forward up here. And we got some nice home cooking as far as buys. So if we go step down to where, yeah. Again, guys, I'm going to piss and moan about this 2 pip miss on my end. So I don't think there's really anything to do on this thing until we come back to the origin of this strong move up, which is going to be, again, this 4 hour zone here. And it may even want to revisit the zone that I missed. Who knows, right? You just never know. Anybody that tells you they know, I wouldn't listen to them. Nobody knows where this stuff's going. But it's as far as probabilities go, I mean, if it retraces to now, again, I'm not as excited about this demand zone as I am the ones that I originally was targeting. So if we get down to here, think about it. This zone was created from the bounce of the daily. I like zones that create themselves, meaning they're not created from a zone bounce. I don't know if that makes sense or not, but a zone that creates itself out in the middle of nowhere, meaning it's not bounced into a zone or it doesn't have a ton of candles to the left of it. Those are really your stronger zones. Zones that only have 1, 2, 3 candles in the consolidation. So obviously, if we're looking at that, that's good because that's only one candle, right? Just like this over here is one candle. This down here on a smaller time frame, well, it's a different time frame, but when a zone creates itself from bouncing into another zone, that's just a little bit weaker to me, if that makes sense. This zone created itself. In fact, it broke through a former supply zone, right? I think this zone is a little bit on the artificial side, if that makes sense. And again, that's because it bounced into a I got to turn my space heater knocked out my goodies. Give me 1 second. Give me 1 second. My space heater likes to knock out my power on my what do you call it? My surge protector. All right, we're back up and running. We are up and running. Okay. 1 second, guys. Okay, good deal. Just wanted to make sure my video was looking good on my end. Anyway, so yeah, I kind of see this as an artificial movement. I don't see that much volume either, right? This would, by definition, be your leg out candle, but what happened to the volume? It actually decreased, right? Now, when we're looking at the demand zone I was chasing initially, okay, there was your consolidation. The leg out candle wasn't the greatest, but at least the volume was growing. Okay, the volume spread analysis range was bigger. So that's what I like to see. On my leg out candles, I've got to see volume start picking up. And I just don't have that here. But as you can see, I have an alert just ahead of it. I still want to see what happens. If we get a very strong rejection, meaning the VSA volume starts picking up, we get a big ugly wick underneath or a bullish engulfing candle, then we may still take a trade. I may still take a trade off of this. But the chances are it's probably going to chew through it, come on down to my confluence, which is my favorite anyway, the 4-hour daily confluence. That's my all-time favorite. That's where I personally have my edge because I've got a lot, for me, I've got the most data on those time frames for my trades. So that's just where I have the greatest success. That's what's helped me dig my my challenge account out of the hole by $9,000. Yeah. I mentioned this yesterday on Trader Nick's stream, but I dropped my 250K account from 250,000 all the way down to 241,000, and got the edge finder. It helped me out to dig out, put it back on the positive, just from following the fundamental and sentiment analysis. So anyway, yeah, I think New Zealand yen is just, for me personally, for my trading styles, it's a ways away. And I think Trader Nick would agree too, because he tends to look at daily demand zones and supply zones. So, just for him, he's probably going to be picking this area down here. Yeah, the same area I'm picking or similar, right? I just do a lot more on 4-hour. I just do a lot more on the daily 4-hour confluence, right? So I just get a little more detailed about it. He is way better than me at the fundamental analysis side of things. And I think maybe I just get a little more detailed on the technical side, if that makes sense. So Yeah, it's cool to see the comparisons and the contrast with trading styles. But at the end of the day, we want the same thing. We're trying to buy and sell generally in the same areas, right? Supply and demand. So it's really cool stuff. But so that was New Zealand yen. Let's take a look at, let's see, did we finish on New Zealand Swiss? Let's double check over. Okay, so New Zealand Swiss, this was the other strong bullish asset I've got at the moment. Got our daily demand down here. Yeah, we did actually talk to this because we got this 1 hour confluence just ahead. I prefer the daily 4 hour confluence, but every now and then if the 1 hour looks this sexy like it does, then I'll be okay using that. Remember, on this 1 hour, we had just a gigantic 1 hour candle out. Look at this. You can see this a mile away. You can see the gap on this thing a mile away too. Is that not a big ass gap when we're talking about the range of that leg out candle? That's huge. I like right? The volume started picking up. The volume could have been a little bit better relative to the size of that candle, but nevertheless, it's pretty strong. So there's going to be my excitement point on New Zealand Swiss. And yeah, I've got a few other zones throughout here on the 4 hour, but when you look at it, that same area on a daily, all you got's a couple wicks, and that's about it. There's no consolidation. There's no consolidation, more importantly, where the whole candle, the whole would-be demand zone candle is not touching the candle 2 candles over in a wick or the body. So that's really why I don't like this area, because that's my first daily demand zone with a gap. That daily and that 1 hour is using the same gap, but it's a gap, right? So that's New Zealand Swiss. CAD's oh yeah, Nikkei. So this is the other one I wanted to go over because this is the one that I'm actually the most excited about. And I'm pretty proud of myself because I did not jump the gun and front run it. And I think Trader Nick actually got in this trade too. He just kind of got in it from this. Let's see here. Yeah, he was kind of using this as his kind of like consolidation or form of resistance. Okay. So this is where he was getting in. I was just simply waiting for a deeper retracement for me personally, just because I got the 4 hour demand zone down here inside of the daily. So you see, I got my alert set here. Now, I got to be honest, I was pretty close to pulling the trigger on this trade about the same area he was, because I was looking at this candle here as a 4 hour demand, and you can see how big of an expanded range candle that was, that broke structure, that went ahead of the form of resistance, that blue dash line, and on super awesome volume. I was this close to pulling the trigger too. But if I did, for my rules, guys, I would not be following my rules, because my rule states 4 hour daily. Up here, I don't have a daily. So if I go up to a daily time frame, okay, here's my daily candle. Up here, I don't have the daily confluence. So that's why I'm just waiting on a little bit more of a retracement. If I go down to a 15, you can see I kind of drew up this funky looking disjoint tool. Okay. This is kind of the megaphone pattern idea that I'm going for. So what's a megaphone pattern? Well, it's basically the master pattern. In other words, finding your fair value, looking for price undervalue to buy, price overvalue to sell or short. So the idea is look for a consolidation point and then start looking for lower lows and higher highs like this, right? So obviously this low here is lower than this low. This high is higher than this high, right? So it kind of fans out, if you will. And then we got another touch up here. I'm waiting on a retracement down to make a lower low, because that next lower low is going to be right inside of my confluence, my 4 hour and daily confluence. And then, that would be basically a continuation of this pattern. So that's my oops. So that's, hold on a second. I swear my mouse gets so touchy at times. Okay, let's try this again. Bam, bam, bam. Okay, this is where I'd be looking. Now I've got a supply zone right there that I got to be aware of. So as far as putting out the projection tool, I would basically leave it here just to see I would put an alert there. So here would be my supply zone. Okay, we're just looking ahead in time, right? So there is a 1 hour supply zone. I better look at that on a 4 hour real quick. Okay, so 4 hours basically the same thing, which is awesome confluence for a profit target, right? For just a place to be aware of price. Excuse me. So if I'm getting into a trade down here in demand, I have to be aware of the overhead supply, because quite often supply. Sorry about that, guys. Sorry about that. It went off just for a moment. I'll wait for you guys to pop back on. Sorry about that. Lost connection for just a moment, but I think I'm back. Damien asking about the volume indicator that I'm using. Yeah, so that's volume spread analysis. You're talking about my volume analysis. So with currency trading, okay, I'm not so worried about this because we're on the Nikkei, but on currency trading, we do not have centralized volume. I'm sure most of you know this. Newer people probably don't know this just yet, but it's not like stocks. It's not like stocks or futures or commodities. You don't have a centralized volume like you have down here. You have to figure out a way around it to get an idea of how much activity is taking place in any one candle, regardless of the time frame, right? So with volume spread analysis, the basic idea is when you see green candles, that's relative volume, relative trading activity, average trading activity. When you start getting blue candles, like this one over here, are always relative to the last batch of candles. So obviously you see the green candles here, they kind of slowly increase. You would think that would be a yellow candle, but because you start seeing the increase in trading activity, it keeps it green and it keeps it kind of under this moving average. But when you start getting candles, and again, it's a very dynamic setup. So as the candles grow, well, then your moving average tends to grow. But when you start pushing your trading activity into the red, well, that's where it goes to yellow, meaning it's above average. And then obviously when you push it above the red, like you have back here, that means we've got an elevated elevated amount of trading activity. Well, why is that important? Because you and me, the retail trader, we're the ones creating these candles down here. Who's making these candles? Typically the smart money, the big banks, the institutions, right? The city banks, the Wells Fargos, the Morgan Stanleys, all them. So I look at this as an institutional volume, and that's all I care about. This is what I want to see because, that tends to be, if they're causing a lot of chaos right there, if they're trading a lot of activity, well, if they're trading there, then I might want to be trading there as well. So the idea is when I get a supply or a demand zone form with high trading activity like this, then that tells me that supplier demand zone must be a pretty strong one because the big banks were stepping in to participate. And again, they can usually only get part of their position in whenever there's only a small amount of candles in that zone. So if price moves away before they fulfill their order, well, then on the retracement back, that's probably where they're going to put in the rest of their order, right? And smart money, the whales of the world that look at supply and demand as well. So whenever I get a demand zone, yeah, that's the idea is I want that demand zone to have higher than average volume, like what you have here, right? So this is a 1 hour time frame of this candle, but let's go to a 4 hour. Okay. So the consolidation on this 4 hour candle, for example, not that much, but then the leg out candle is where it started to grow. Now, I personally like to see the consolidation candles with elevated volume as well. Like in this case, we don't have that. So does that mean I want to put on a full risk on a trade? No. That just means I'll still be interested in it because it is the origin of the strong move up. The leg out candle did have volume growing quite a bit relative to that basing candle. So I still want to potentially participate, get into a trade there. I'm just not going to be risking a full position. I might do a partial, just enough to kind of dip my toes in the cold water, right? It's April. The swimming pool's just opened. Here in Kansas City, it gets cold in the winter. Starts warming up pretty decent in April when they open my swimming pool outside my apartment complex. That first time jumping in the pool is icy, right? It's pretty chilly. So I just want to be dipping my toes in, right? Yeah, my screen. Gosh dang it. I'm sorry, guys. There we go. So yeah, this was what I was referring to. Okay, this 4-hour demand zone, very light, very light trading activity. The leg out candle, obviously the volume stepped back in and pushed up. So this was what I meant. I have an alert there. If I get into a trade here, it's not going to be a full position. It's only going to be a partial. So that's really the idea. But in a perfect world, the basing candles themselves, I want to see the volume up here, elevated volume as well. But I don't always get what I want, right? I don't always get what I want. But I can control the risk I put on the trade. So that's New Zealand dollar, because it was giving us a bullish rating as well, bullish score. And honestly, the better spot to be getting into this trade from a higher time frame is going to be all the way down here. Why? Well, because that's the lower end of the curve. Remember, we got curve analysis, right? So if we go to the weekly time frame, there's our swing low, there's our swing high, and we're obviously in the middle of that. So is this not diddling in the middle, potentially on a weekly time frame? It is. So the highest probability would be obviously down here on a daily in this bottom third. So remember, you got the middle quadrant is red whenever I write up my curve analysis, and then the bottom is green. The top is green as well. Those are the places where I really ultimately want to be playing, where I ultimately want to be getting into the market. I'd either be shorting up here or buying long down here. So if I'm looking at that, go down to my daily, okay, there's my daily 4-hour at the bottom third. So that's the highest probability because it's buying low, okay? Buy low, sell high, right? Down here would be my discount zone. Now, obviously, from here, this is where you're dependent on the time frames. We can step down to a smaller time frame. The curve analysis would just be a little different. Okay? This time, the curve analysis would be from this, we'll call it this swing low, to the swing high where it's at now. Boy, it is acting up today. YouTube Studio is failing me today. It is failing me today, boys and girls. This YouTube Studio. Yeah. All right. I'm back up, it looks like. So anyway, guys, so that's New Zealand dollar. Not a whole lot left to be said on that. I do want to take a look at my financial juice real quick just to see what we got coming out. Okay, so Trump did make it to Davos after all. So he is there. Remember, at the outset of the show, I was talking about how they had their electrical issue on Air Force One. They had to turn around and go get a new plane. So he is there. Okay. Oh, and that started right now, by the way, 7:30. So as soon as this stream ends, guys, I'm definitely going to go and watch a recording of it. Watch a recording of it and see what he has to say. Because I bet everybody's waiting with bated breath to see what he's going to talk about with Greenland and the tariffs. Remember, he's trying to put a 10% tariff on the Eurozone and could potentially move up to a 25%, I think it was. Yeah, of course, you got Scott Bessent, okay, Treasury Secretary, kind of downplaying it. Let's take a look and see what this report has to say, this release. What in the hell is going on? Gosh, what is up with technology today? It's just not being fast or anything. Of course, you got the taco trade talk coming back out. Okay, Trump threatens the big high tariffs, and just like he did last year, he kind of meets in the middle. It's just a negotiating style, man. He tends to get things done, though. Love him or hate him, right? So anyway, we'll digress and go back. Let's take a look at gold. Take a look at gold. So it's giving us a +5. Now, I was waiting on a discount on this one, but as you guys can see, this thing's just going ridiculous. This thing's going crazy. Here was our Friday close. We had a gap up on Sunday/Monday, and it's just continuing to go. I mean, I went ahead and wrapped a daily rectangle around the daily demand. But the problem is not really getting a whole lot of volume on that last candle before the gap up. So in other words, the Friday post-lunch candle just was dead. You had all your activity taking place in the morning that Friday. Okay, 9 a.m., 10 a.m. was your last kind of elevated trading candle. So I can't really draw anything up on a 4-hour on this last candle because there was no trading activity. So I'm basically just keeping my eye on the daily zone. But excuse me, gosh, I get the hiccups today. I'm keeping my alert on the daily because, I mean, you do have a 4-hour as well. Oh my God. Why? Why is my technology not working? Let's try it again. Let's try it again. Gosh, I just want my technology to work and not peter out on me. All right, there we go. So again, guys, daily demand on gold. Pretty high up though. Pretty expensive even there. Okay, that daily candle is going through a form of resistance. So I've got my alert set ahead of it. And again, just like I was saying, the 4-hour time frame, that's the last candle on Friday, this past Friday, before the big gap up on Sunday here in the States. But there was no volume. There wasn't that much volume there. The volume really took place in this 4-hour candle, which was the trade here. It would just be from the daily. Because I'm not really getting a whole lot. I mean, the 1 hour, so think about it. So that's our daily, which is the green or the yellow rectangle. But the 4-hour and the 1 hour, okay, the highest volume is still on the same candle that's basically touching the same area. So that's a pretty good confluence in itself. In other words, I'm just basically ignoring the candles, the Friday afternoon candles. Okay, we're saying to hell with them. Because they're just not giving us anything to play with. So I can't really drop my alert down here. In other words, I'll leave it up there because that's where the volume took place. That's where all the trading activity took place, was Friday morning here in the States. So that's why I've got my alert set there. Would probably be interested in a long position if we came down there. Possibly. It's going to have to prove itself though, because when price did gap up Sunday/Monday, just went sideways. Okay. The whole Sunday evening/Monday, Monday part of Asia session, yeah, that's as boring as it gets. That's buyers and sellers just trying to decide what to do. Right? That's equilibrium. That's buyers and sellers agreeing with each other. Like, we don't know what the hell to do. And then all of a sudden, price leaves that zone. Imagine if I turn on my master pattern, it's probably going to have, see here? That's consolidation. That's anytime you see a box like this, that's basically fair value. It's just agreement. That's supply and demand equaling each other. In the case of gold, it was a whole day plus that it just was like, okay, we're all comfy in this area, the 46.75 area, right? And then finally, at some point, the bulls or the bears do push price out of the range, right? In this case, they pushed it out. It just kept going. So the goal is, the idea is to buy under value. And you see here, we've got another one forming ever since London. Okay. London is kind of creating its own little consolidation zone. So the goal is always to buy under value and sell above value. But in this case, I'd like to wait till we get a breakdown to the daily, and then we might possibly have a trade on our hands. But I'm going to utilize this entire daily zone as a stop loss. So in other words, stop loss, oh gosh dang it, stop loss is going to go under the entire thing. That's if I get in this trade. It's going to have to jump through some hoops because it is pretty expensive. Okay, especially when we look at this thing on a daily. That's as high up on the curve as you can get. Daily, weekly, it doesn't matter. So I think there's probably better setups than gold right now, because gold's just going parabolic. You definitely don't want to short it, because this place is littered with a graveyard of the short sellers that thought that these pullbacks were dropping and then only to get turned around, right? There's some of them that made money. Hey, there's some shorts that made money here. But in the grand scheme of things, it's just been going up and up and up. You got a few pullbacks that some shorts did make money, but not a whole lot. Especially position traders. Position short sellers, they ain't making shit, right? Because they're typically in for, weeks to months, right? So if they shorted here, this is a daily chart. If they shorted here, right, they were in unrealized profit for about 2 weeks, but then price turn around and reverse. And that's a big, healthy pullback, is it not? Yeah, you do not want to be a position short seller on gold or silver at all. On an intraday session, yeah, but even then, it's just a little sketchy. It's a little, you got to have some luck on your hands. Let's see. Oh, and by the way, I do have a new item on the list. DAX. Somebody was asking me about the German DAX, I think yesterday or maybe the day before. But the DAX is now giving us a bearish rating. Look at that, -5. Okay, some PMI data, the retail sales, crowd sentiment being bullish, meaning we want to look at that as a contrarian signal. Trend. Okay, these are all bullish items. You got 2 items against the narrative, and that's your seasonality and your consumer confidence. But other than that, a whole bunch of neutral ratings. But DAX is now on the list. So let's go take a look at DAX. We'll look at the German 40 or German 30, okay, depending on how old a person is. Used to be German 30, now it's German 40. So as far as a short goes, let's do this. Turn my drawings off for a second. I want to look at something real quick. Yeah. So on the DAX, we had 1, 2, 3, 4, 5, 6, 7 months of just indecision. But now we've broken through the top. Now it says bearish. I don't know if I'm agreeing with that though, because what I see is a week, and on a weekly time frame, there's your consolidation. We did break through the top, so the demand finally exceeded supply enough to push through and break a new high. But now we're getting that reversal candle on a weekly, on a daily. So yeah, so I guess the way I see this is this right here was a demand zone on a daily and a 4-hour. Okay, so that was a confluence, and now we've broken through it. So that shows me that we've got some strength somewhere in this down move. Well, obviously, you guys can probably see that just like I can. We got a daily supply zone right here, right? So we got this candle here as our daily supply. And I know that's a supply because we had a gap. We've got 3 big red candles down. And oh, by the way, it broke through an opposing demand zone, right? So now just need to find a retracement back. Now let's drop to a 4-hour to see if we can find some confluence. Do we have any confluence on that daily demand? Let me turn that off. Yep, sure do. Got a nice green candle here. Okay, there's going to be our supply zone, our 4-hour supply zone. That's pretty good looking confluence, if you ask me. So we'll just kind of tidy it up a little bit. So yeah, there would be my alert. Now it's retracing all the way to back to the close to the the overall highs, but that's the origin of the strong move down that broke a demand. So I like it. So I'm gonna set an alert up here, and it may not hit this week. May take. I'm just gonna throw this alert out through the end of the month. Okay. So that's what I'm going to do on the DAX, the German DAX, because I'm interested if it hits that zone for all the reasons I just mentioned. Breaking the demand. I got to sneeze. Excuse me. Sorry about that, guys. I had to sneeze. So there's your German DAX. Landmines. Okay, I got a landmine all the way over here. This is going to be a 4-hour demand zone way down here. Now, is that a daily also? Not really a daily. Oh, in fact, I'm going to delete all this. Get that out of the way. So I got a daily demand zone all the way down here. That's that 4-hour zone I just drew up, demand zone, but I don't really get a confluence on a daily. Okay. Because these wicks are touching the wicks to the right and left. Right. So that looks like an efficient price structure on a daily time frame. But on a 4-hour, that's where I have my gap. There's a gap down here at the origin. But remember, this is only a profit target. This isn't a place to buy. That's the place to short because it is giving me the signal. Well, why not this area here? Is there not a zone in here I can find to short? Potentially. It's just the fact remains our gap is further up on the scale here. Right? So that's going to be the inefficiency that if I'm a big bank and I'm trying to find liquidity for my position, I need to be looking higher up on the curve. Okay. Gap with strong liquidity above. I know that because it created the gap. So yeah. And not only that, but price did hit the zone. Yes, it went through it. But again, it's just a little too low on the scale. I can get a much better premium up here. Okay. Yeah, that remains the spot. So that's your German DAX newly on the list. Now, the other thing too is, okay, to be really safe on this, probably the safest thing to do would be to wait for some higher time frames to break some structures to the downside. Yeah, we did break the demand zone confluence, but I kind of would rather see a series or a sequence of lower lows, lower highs, something like this, right? That would ultimately be the higher probability, kind of like what I was waiting on with Bitcoin up until the geopolitical events of Sunday and Monday came out with the tariffs and more Greenland threats. But that's ultimately the safest play is if you wait for a series like this, right? I mean, that's just the reality of it. Yeah, it broke the demand zone, but in the context of everything, you had a sideways trend, you had a swing low to collect liquidity, and now we've gone up. I mean, this is our impulse leg, higher time frame impulse leg, is it not? This whole leg right here. That's higher highs. So I just need, again, higher probability is to wait for this sequence or this series, but I wouldn't be upset at all if I'm trying to take a short in this area, potentially. Right. So that's your German DAX. What other shorts ideas I got? I got 15 minutes, guys. So if you got any other items that you'd like me to bump to the list, top of the list, let me know. So pound CAD, Euro, Aussie. Let's take a look at those. Pound CAD. Okay, so here's our pound CAD short idea. Now going all the way out to the higher time frame. Remember, we are, and we've been in this context for a while, but we are in a monthly supply zone. That's going to be the big orange box. So monthly supply, and then specifically the daily, which was inside of the monthly. And actually, I think that's, oh, never mind. That was a week. Was it a weekly? I guess I can't remember now. Is this a weekly in the middle? Go double check that. It was a daily. Okay. So yeah, that's definitely not a weekly. So that's going to be our daily right here. Oh my gosh. Come on. Ugh. Okay. Daily supply. Right. So that's daily supply. It's a big candle. Is that really the daily? Hold on. Let me go double check this. Something doesn't look right. Is that candle that big? Oh, yeah. Okay. Yeah. Well, that's what it was. Daily supply. Okay. We're looking at that green candle right there. Big, ugly move down. Got to be aware of that. Now, we've already bounced into it once, twice, 3 times, 4 times. So the idea is to short this thing, right? Well, now we finally had a big impulse leg after this most recent touch. So created a new daily supply in its wake. And you see the red line, the red box, that's going to be my 4-hour supply. Clear up here. So that's the highest probability one. Okay, if we get a retracement clear up there. But in the more near term, we had a little bit of a rollover from and broke this like quadruple bottom that you see here. And we broke through that. And now we're starting to create a new series of lower lows on a 4-hour, especially a 1-hour as well, right? So on a 4-hour, because I don't think I can use this as a daily. Yeah. See, on a daily, there's nothing here to use as far as do I have a gap? Okay. All these candles are overlapping. So daily time frames out, I would have to look at this in the context of a 4-hour, 1-hour. Okay. So this was a 4-hour zone at one point, but it got touched right here. So that mitigated it. That means that closed out this gap. That means that's all an efficient price structure there at that candle and above. So I can't use that. I have to find my nearest gap, my nearest inefficiency in the market, and it's going to be right here. Okay. Now this 4-hour candle isn't done yet. So this could totally change things. If this comes up and closes up here, well, then we've got a different story. But assuming it closes somewhere down in this area, which, by the way, there's only 10 minutes left for this candle before it closes. Okay. So we got about 10 minutes left on this 4-hour candle. So assuming it closes down here like it probably will, then now that ensures that this is my gap. So that's your 4-hour. What about 1-hour? 1-hour is going to be that white dashed line because there's my 1-hour candle, my 1-hour candle with a gap underneath it. And the gap's going to look a little different here. Okay. This gap is going to be right there. So there's your 1-hour gap. So I got a really nice 1-hour, 4-hour confluence because that means the supply zone's on the other sides of it. So that's my play right there on pound CAD. Just a simple retracement up. And we can short that at least to the bottom. All right. So that's the potential play on pound CAD. And alert is set. Alert is set there. Alert set. Pound CAD. Okay. Pound weakness, Canada strength. Going back to our heat map. Pound is only at 33%. Okay. Canada's the strongest currency, 83%. So that matches the surprise meters. British pound 33. Let me go double check something over here. Yeah, I was going to say, I thought something changed. So inflation numbers did come out, and the PPI, CPI came out today. Neutral rating on the PPI, but we had a hot rating on the CPI. So the CPI, or the British pound, did get that strength, like what we were talking about at the outset of the show. And there it is. Okay, CPI. What else we got? President Trump is speaking as we speak. Okay, so he's on there flapping his lips at this time at the World Economic Forum in Davos. So you guys, as always, anytime you want to read out of speeches and such, just go to Forex Factory, look for the speech, click on your little folder here, and then you can usually just click on the latest release. Now, this one won't be ready for some time, but you can just click on latest release. In this case, it just sends you to whitehouse.gov, which is the White House's main website. And you can see speeches, bills that have been passed, holidays. I mean, all kinds of items on here. White House, they usually do a pretty good job of updating stuff. Briefings, presidential actions, nominations, again, executive orders, things of that nature, fact sheets, all kinds of stuff. So if you really want to stay on top of the politics of the U.S., that's a really good site, because that's all created straight from the horse's mouths. So you're not having to look through news, right? News, you guys know this. News can quite often kind of come up with their own themes, right? Their own agendas. So why not just go straight to the horse's mouth? So in this case, whitehouse.gov, and then obviously for the president, let's go to his Truth Social here. X is another really good one. Okay, just go on here and follow premiers, prime ministers, presidents, that kind of thing, just to always to get the facts straight, get the news straight from their mouths, rather than it being filtered through a news organization where they have a tendency of changing things up. So, and then other than that, the only other red folder event we have is Australia's got their employment numbers coming out this evening. So just a refresher on that, they're actually projected on the employment change to have a pretty nice number come in relative to their last number. They were 21,000 in the hole on their employment change the last period. They're actually projected 28.3 this time. So let's just take a quick look. I'm actually kind of curious. Okay, so this was the last one here in December, and now we're projected to come up to the 2021. So if all is well, then this should come up to this area. And you can find trends in all this stuff. Yeah, this kind of looks like a disc joint channel. You got a low, you got a higher low. Up here, you got a high and then a lower high. So it's kind of folding in on itself again, it looks like. Give me 1 second, guys. Give me 1 second. See what I got here. I don't know what the hell that is. Anyway, that's Australia. That's the Australian numbers. So keep in mind, guys, we've got a little bit of just overall from a 30,000 foot view, we got a little bit of risk off theme going on just in the markets in general. Okay. So the US dollar has been down all week. The VIX has been up. Okay. The volatility index, when you guys see this thing get up higher like this, like we had back here, then that typically means there's a lot of excitement in the air, not always on the good side. Okay. Because obviously with the talks of tariffs and, the retaliation from the Eurozone with their set of what they called was their tariff bazooka, okay, for the U.S., for the President Trump going after Greenland, that just creates it just stirs up a lot of excitement. Again, that can be good or bad excitement, but excitement nevertheless, to where, there's a lot of trading activity going on. So it's always good to kind of keep an eye on that, just to see, hey, are we down here relatively, are we having relative normal trading days, or are we having crazy volatility? Crazy volatility is kind of scary times, especially for newer traders like we had back here on Liberation Day, guys. Here's Liberation Day back here. That's a huge range. That's a lot of volatility that typically likes to whipsaw people in and out of their positions. Same thing here. This may not look like much, but that's mid-October, and this is late November. Okay. And now we're starting to get elevated again. So anytime this thing jumps up over the 20s, 25s or higher, then that's where a lot of trading accounts go to die. So just be aware of that. Typically when you're down in the 15, 16, 17 area, that's just normal trading volatility, right? But be aware, we are in an elevated state on the VIX. Dollar is down. The U.S. stock markets are down. Okay, just looking at the daily chart on these most recent candles, S&P, NASDAQ, and the Dow, and then the RTY. RTY is actually maintaining pretty decent, which I know Nick is happy about because I believe he's still in that Russell trade. Okay, so I'm sure he's pretty happy about that. I'm, of course, waiting on a retracement on the Nikkei. Hopefully I do get that retracement because that's really going to be my favorite trade of the day. And oh, by the way, it looks like, oh, I guess I'm not in it on this chart. This is my demo account that I used when I was doing all my streaming with the previous company that some of you guys know about. But on my Aussie Swiss position, it looks like it's moved up rather nicely, actually. I need to log into one of my challenge accounts on here, but I'll do that for tomorrow. Aussie Swiss, where are you at? You're down here. Aussie Swiss has taken off pretty decent of late. Okay, remember, we bounced into the 4-hour supply zone that I wanted to be careful about, so I've moved my stop loss. And we bounced in, got some upper wicks, rejected it. This is exactly what I suspected, guys. I wanted to be aware of the 4-hour zone, knowing that we'll get some type of reaction like we did. But ultimately, I'm in favor of it actually chewing through. So that's what we're trying to do now. So can we make a higher high? On a smaller time frames, we've made a higher low. Okay, higher low. So now I just want to see that higher high. Now, if we start getting price chew through this supply zone, then that's where I'll eventually take my stop loss, my trailing stop loss, and move it under this swing low like this. Okay. That way I lock in a little more gains. I don't want to move it there yet, though, because we have to break this structure. Every time price breaks a structure, in this instance on like a 15-minute time frame, 15, 30-minute time frame, okay, then that's where I want to start slowly moving my stop loss up. I would say 1 hour time frame, but yeah, it really just depends. It depends on how sharply price breaks a structure, right? If it's just barely breaking a structure, in other words, it comes and breaks the structure, but maybe right here, or maybe it just slowly wicks in, then that's not a very strong break of structure. So I'd probably trail it a little bit tight like this. If it doesn't, though, if this candle closes a lot higher up, then I'm okay with giving it a little more wiggle room because that's a pretty strong close. In other words, that's a very bullish move. If I'm getting bullish strength, then I'm not as worried about, trying to maximize my unrealized gains, if that makes sense. So anyway, at the moment, nothing has changed. I'm leaving my stop loss just a few pips above the entry, which was the yellow. Okay, remember the yellow was my entry, the yellow dash line there. And I've got my trailing stop up here after I started my stop loss down here under my demand zone. And that's a little aggressive, right? Because obviously the safest the safest stop loss would have been underneath the daily demand zone, right? But I'm feeling a little frisky on this thing. Okay, that's why I put my stop loss rather than the bottom of the daily. I just put it at the bottom of the 4-hour, which is basically the 50% mark of the daily. But I love it. And I'm fine with it because the confluence does everything for me. It's 8 o'clock, ladies and gents. Wow, that time flew. I'll be back on tomorrow. As always, do make sure that you like, share, and subscribe to my channel. Couple things on that. And actually, I was on here yesterday. If you guys were on yesterday, Trader Nick's live stream. I did the last 30 minutes of his show. Okay, so if you just go to his lives, you can actually go to yesterday's and click on it and then just 30-minute mark. Okay, right here. So that's me working to close it out. So really cool. He invites me on from time to time. He's got 523,000 subscribers, guys. So it's pretty cool for me to go on to a site that big. It really is. He's gracious. He's helping me out. Hopefully get me a little more exposure. So So yeah, guys, definitely stay on top of his show. I'm going there right now. As soon as I close, I always finish my stream and go straight to his stream to watch. So really good stuff. But then lastly, just remember my stream here. I'll get a new live stream created for the one that, for tomorrow, for Thursday and Friday. We'll get that set up. Check out my shorts. I do these things daily. I've got some pretty decent views on these things, so I'm pretty happy with my shorts. I just need to translate that into my live streams and then my Sunday long form videos. So that's really my goal right now, is to kind of get some more traction on the live stream. I know I mentioned this a time or two, but I may experiment with moving around times, just to see here in the States if maybe I get some more viewers later on in the day. We'll find out. So still playing around with that idea. I'll let you know if anything changes. But as of right now, 6:30 is my start time. But anyway, I'm out of here, ladies and gents. Have a wonderful day. Stay safe, and we'll talk to you tomorrow.